Hello everyone, welcome to Anand Rathi Daily Commodity Podcast. Let's start with a gold. Gold was seen consolidating its previous day gain during Asian's trading session, holding below $4,000 mark. Despite the soft US dollar, metals faced headwinds from the improving US-China trade optimism and the Federal Reserve recent hawkish tone, both which supported positive risk tone and a limited safe haven demand. The broader market moved unconscious following the global equity sell-off, led by the weakness in US tech, AI-related stocks. Concern about the stretch valuation and the warning of possible corrections rambled through the Asian and European market. Meanwhile, prolonged US government shutdown added another layer of uncertainty. China, meanwhile, announced extension of suspension on export controls measures for the certain US entities, positive gesture amid improving the trade ties. Gold has already gained more than 50% this year, hitting the record high in October, driven by the Fed rate cuts, robust ETF inflow, sustained central bank buying. But after such a steep rally, prices now cooling off. Outlook: gold may stay continue to consolidate in coming days as improving the trade related risk appetite alive. Technical side, short-term bias remains sideways with the spot gold trading below 21 period moving average near 3,990. Currently, on MCX, it is trading near 20,500, support near 18,500, 17,200, resistance 21,000, 22,167. Base metals, copper prices recently rallied and touched an all-time high. Optimism over the US-China trade deals, which could boost demands for the key industrial metals. Supply disruptions as major global mines have already highlighted a fragile balance in copper market, crucial materials for the electrification and a clean energy infrastructure. However, the rally post US dollar strengthened to the recent high seen in May, making the dollar prices commodities more expensive for the buyers using another currencies. In China, bargaining buyers was seen in domestic market as a consumer took advantage of the pullback. Adding relief, a key African port crucial to the China Africa copper trade has reopened after the week-long shutdown, easing the some supply concerns. Copper could see the short-term bounce over the next 24 to 48 hours, but any rebound is likely to be limited. Silla may re-emerge the next week as a stronger dollar kept the upside limited. On M6, copper is trading near 1004, support 998, 994, resistance 1011, 1015. Coming to the crude oil prices extended their losses steep more than 1% yesterday to settle the 2 week lows. Brent closed at $63.52, WTI at $59.60 after the US crude oil inventory jumped by 5.2 million barrel, far above expectations, fueling oversupply concerns. Strong gasoline demand had the limited losses, somewhat with the inventories down by the 4.7 million barrels, suggesting the solid consumptions. But the additional pressures came from the Canada move to the potentials lift its oil and gas emissions cap. While Ukraine continued to attract on Russia facilities and OPEC plus moderate supply hike, keeping the market on edge. Coming to the outlook, oil is likely to stay range bound with a mild downside bias as a market be on a steady OPEC plus a supply against a sluggish demand and the prolonged US shutdown. For the WTI, support lies at $59.50. Break below, we can expect it can be touched near $57.50, resistance near $60.50. On M6, it is trading near 5,315, support 5,255, 5,195, resistance 5,400, 5,465. On a rupee remain under pressure amid sustained dollar strength and a steady demand for the foreign currency from the domestic importer. RBIs continue to intervene to stabilize volatility. With the dollar's index consolidating near recent high, broader the dollar strength is expected to persist, keeping the rupee near-term bias weak. Direction ahead largely depends on progress in US-India trade talks. Thank you for listening. Have a productive trading day ahead.